a 1400 odd crore order win for Punj Lloyd, around 236 million US dollars in Kuwait. I believe it's a new country, though of course they have a strong presence outside India, Middle East, northern parts of Africa, so on and so forth. JP Chalsani, MD and CEO of Punj Lloyd, joins us right now on the show. Good having you, Mr. Chalsani. Thanks for joining in. Sizable order win this, and I believe it takes your cumulative order book in FY15 to 6,400 crores. Tell us, one, about whether these orders that you've received, and this one in particular, are these at comfortable margins, and what is the execution time frame for the same?
Yeah, I think the couple of things are important in this. One is that including this order, all the orders we've won this year are from outside India on this. Second is that this expands our presence now into 24th country, our operations on this. Third, as far as this particular one is concerned, this is for the KNPC, where we're going to do the tank farms, loading arm and associated facilities. And this project is supposed to be at good margins, and we're confident that we'll be able to execute at budgeted cost so that we retain our margins what we said that. And this shows more importantly, it shows the confidence of international clients in Punj Lloyd.
Chalsani, afternoon. Good margins indeed. Could you put a number to that?
See, like I said sometime back in the media that our expectation for any projects is minimum is 10% margin is what we expect to do that. So it would be difficult for me to say that this is the number we're working on. There's a budgeted number which is higher than this. But then what I can safely say is that every single project of ours is 10% plus is what is going to be the margins.
Fair enough, won't push that, but we spoke about how, yes, you do have exposure to the Middle Eastern countries, but run us through what takes your overseas order book to in total, and are we going to see more orders flowing in this vein?
So currently, if you look at it, our the top line share-wise, the 70% of our top line comes from projects outside India and 30% from India on this. And as of now, we are maintaining that sort of a ratio, and in fact, this financial year, predominantly most of it, almost 100% came from outside India on this. But however, with the change in the atmosphere in this country, we are expecting that in India, so there will be more and more opportunities coming in, which will materialize into results, maybe starting the second half of this financial year, starting the Q3 of this year. So we expect that there will be more and more opportunities converting into contracts in India.
You reckon the ratio might still say 70-30, and by that what I'm trying to ask is that would the international order flow continue to be impressive?
Yeah, as of today, the number of projects we have put in the bids are more in international market. So for the time being, it might continue to be in this ratio, but as we move ahead, let's say from the year to 18 months time, the ratio might start changing. Because more and more orders will come from India, not because the orders from outside are going to come down, but the volume is going to increase, and then volume from India is going to increase substantially.